The first atomic bomb was dropped on Hiroshima.
Oh, the humanity!
The fires of frustration and discord are burning in every
Let us
city.
not forget for a moment the toils and efforts that lie ahead.
They say that those who forget their history are condemned to repeat it. This is the History Lessons Podcast with certified financial planning practitioner Patrick Huey, author of History Lessons for the Modern Investor, and your guide to financial wisdom in the past, present, and future. You ready? Good. Let's get historical.
You know, every so often someone in an official-looking building somewhere in D.C. decides to redraw how we're supposed to eat. Remember the old food pyramid a lot of us grew up with? Bottomless bread and pasta at the base, a polite nod to vegetables somewhere in the middle, and a tiny triangle of fats at the top. It sure looked neat on a poster. And the real-world results couldn't have been much worse. More obesity, more diabetes, more heart disease. So last week, in one of those official-looking offices in D.C., they blew up the pyramid as we know it. It turns out it's not the diagram that matters, it's the outcomes. And that's a pretty good way to think about money, too. You can have a beautiful financial chart on paper with perfect slices for growth, income, and safety, but if that mix doesn't actually support the life you want, retiring on time, handling surprises, and helping people you care about, oh, and on top of that, sleeping well at night, then something on the plate needs to change. Right now, the economic menu looks like a diet in transition, an economy that's still growing, but unevenly. Services expanding solidly, housing and factories lagging, job gains softer once revisions are counted, and overall conditions, depending more on how you choose to interpret them than on any single headline number. You can tell a scary story about that plate or a cautiously optimistic one. Either way, the lesson is the same as with the old food pyramid. Judge by the results, not by how pretty the picture looks. For your finances, that means paying less attention to perfect diagrams and more to whether your actual mix of savings, investments, cash, and debt is giving you a life you can live with over multiple courses. Now, if you or someone you know is still living on a steady diet of hot takes and headline casseroles, let's chat about that in the comments. It won't count as a vegetable, but it might be the healthiest thing your financial plate sees all week. After the break, I'll be back with this week's history lesson for the modern investor. In this week's history lesson, we're going back to January 15th, 2001. That's when Wikipedia goes live and when the world of good enough knowledge changed everything. On that date, a strange little website went live with an even stranger idea. Let basically anyone on the internet write and edit an encyclopedia. No expert committees, no leather-bound volumes, no 10-year update cycles. Just a free, constantly evolving storehouse of good enough for now information called Wikipedia. Launched by Jimmy Wales and Larry Sanger as a companion to their more controlled project, Newpedia, and who's ever heard of that, Wikipedia quickly overwhelmed its older sibling. Volunteers around the world hammered out articles, corrected each other's mistakes, cited sources, well, sometimes, and proved that a messy, crowdsourced approach could compete with and often surpass traditional reference books. It was not perfect. Early pages were thin, biased, or flat out wrong. But over time, the open system improved as more eyes, more edits, and more data refined the content. For individual investors and retirees, Wikipedia's rise is more than a tech curiosity. It's a sharp reminder that we now live in an age of infinite information, uneven quality, and constant updates, and that how you use information matters more than how much of it you can access. Here then are 4 lessons for the modern investor from Wikipedia's unlikely success. First of all, information is free, and judgment is priceless. Wikipedia made knowledge cheap and abundant. Markets did the same with financial information, quotes, charts, analyst opinions, retirement calculators, tax ideas. You can drown in it if you choose to. The problem most investors face today isn't a lack of information, it's a lack of discernment. The skill that matters is not knowing everything, but knowing which sources you trust, which numbers are relevant to your situation, and which opinions, entertainment, masquerading as advice. A retirement plan built on random internet snippets is like writing an encyclopedia article with no citations. It might sound confident, but you don't really want to rely on it when things get serious. Second, good enough beats perfect but never finished. The aforementioned Newpedia, Wikipedia's older sibling, aimed for perfectly vetted expert articles, and it moved at a glacial pace. Wikipedia settled for publish, then improve. And in your financial life, perfectionism can be its own form of procrastination. I'll start saving for retirement when I understand everything. I'll invest once I find the perfect time. I'll meet with a planner when my situation is less messy. Meanwhile, the years pass. A good enough savings rate and a simple diversified portfolio started this year will almost always beat a theoretically perfect plan that starts 5 years from now. You can refine as you go, just like Wikipedia does. Third, beware of the edit wars, also known as overreacting to every new fact. Popular Wikipedia pages sometimes suffer what they call edit wars, where contributors constantly tweak, undo, and rewrite based on the latest outrage or sliver of information. Many investors behave the same way. Every headline, every market move, or tax rumor triggers a new edit to the portfolio. And that churn usually leads to higher taxes through short-term capital gains, more fees, and potentially transaction costs, and eventually emotional burnout. The better approach here is what experienced Wikipedia editors do. They step back, they verify their sources, they make changes only when they genuinely improve the page's structure and accuracy. In your case, that means making changes that improve diversification, risk management, and tax efficiency, not just changes that scratch the itch to do something. Finally, this week, your financial article needs sources and a talk page. Every serious Wikipedia article has citations and a talk tab where editors debate what does and doesn't belong. Your financial life deserves the same. The sources are your written goals, a basic financial plan, and clear assumptions about returns, inflation, spending, and taxes. The talk page is the conversation you have with a planner about trade-offs. Roth versus traditional, paying down debt versus investing, when to claim Social Security, how to structure withdrawals. You get the point. If your portfolio or retirement strategy can't be cited, if there's no written rationale, no data, no documented tax thinking, it's closer to a stub article than a reliable entry. Here are my final thoughts this week. Wikipedia didn't win by being flawless. It won by being useful, accessible, and willing to improve in public. Your investing in retirement approach does not need to be perfect on day one. It needs to be simple enough to implement, grounded in reasonable assumptions, and documented so you can review and revise it over time. In an age when information is everywhere, yet wisdom is scarce, treat your financial life like a living article. Start with a draft. Cite your reasoning. Invite thoughtful input. By all means, ignore the noise. And keep quietly making it better year after year. Have a great week, everybody.